The Employee Retention Credit from the IRS is the last major COVID relief program. Claim up to $26,000 for each employee you had on payroll. This is Marty Stewart with Disaster Loan Advisors. The IRS tax refund is newfound money for your business. Let us help you navigate the ERC program with flexible options and working together. You can relax and have peace of mind that you're in good hands. Stay safe, stay compliant, and keep more of your refund. Take the next step and schedule a free ERC consultation call with us today.
What is the non-refundable portion of the Employee Retention Credit? Some of the advantages of the Employee Retention Credit is the ability to claim a 70% tax credit, ERC, for revenues obtained in each quarter of 2021. The ERC is extremely beneficial, amounting to $10,000 per employee. The ERC program rules and deadlines are constantly changing. As a consequence, many businesses are confused about where they are in terms of ERC. Many individuals are unaware that ERC applications for qualified wages will be accepted in 2022 for eligible employers. Are you conscious that there is a non-refundable element to the Employee Retention Tax Credit system for the entire quarter? Here is everything that you should know about the non-refundable portion of Employee Retention Credit. What is a non-refundable credit? You can't use a non-refundable credit to increase your return or create a new refund check. Employer share return or savings can't be more than your tax bill. If the credit is non-refundable and surpasses the tax burden, you lose the excess in a recovery startup business. The ERC's non-refundable portion is 6.4% of profits. This is the employer's Social Security contribution. The Employee Retention Credit, which would be a wage credit, rewards employers for retaining workers on their payroll. Businesses affected by COVID-19 may be eligible for a premium assistance credit and a refundable rebate of 50% or 70% on salaries paid up to $10,000 for qualified health plan expenses. Employers who knew how to file for Employee Retention Credit before the initiative stopped utilize Form 7200. This application allows the company to seek the eligibility requirements and credit payment for the quarter ahead of time. On Form 7200, you can claim credit for paid sick time, parental leave, loan forgiveness, healthcare plan costs, and the employer's part of Medicare taxes. The employer must keep the documents of payroll taxes and papers confirming each owner's vacation in order to prove the claim. Form 941, the employer must also save his or her quarterly federal tax return advance payment. The deadline for submitting Form 7200 was January 31, 2022, as per the Internal Revenue Service, IRS. Non-refundable credit. The non-refundable portion of the credit for qualified sick and parental leave pay given in 2022 for absence taken following March 31, 2020, is limited to the employer's part of payroll tax on earnings obtained in the period. Any credit percentage sought on Form 941 for the eligible small company payroll tax credit for expanding research activities has been deducted. On Form 941, any portion of credit remaining for eligible sick and parental leave pay at the end of the quarter that exceeds the employer part of Medicare tax for the quarter is reclaimed as a non-refundable credit. The credit's refundable component has no influence on the obligations listed on Schedule B for full-time workers. Go to irs.gov/plc for extra information on the credit for eligible sick and parental leave pay, along with the periods for which it would be taken. Non-refundable tax credit. To look at it differently, your tax burden cannot exceed your savings. If your only credit on your 2020 tax return is a $500 child and dependent care credit and your tax due is only $200, the $300 difference is non-refundable. This means the credit will pay the entire $200 tax, but customers would not be reimbursed for the remaining $300. In 2021, the child and dependent care credit was fully refundable, resulting in a $300 refund in addition to no tax. The non-refundable fraction of wages for assistance credit purposes is restricted to a company's equity of payroll tax on salaries in the QTR, then after the equity is first lowered by any lending claimed on Form 941 for the deposit portion of loans for expert knowledge sick and family leave wages paid in 2022. When filling out Form B, if you have 100 or fewer full-time employees, you must apply the non-refundable part assistance credit for the whole quarter to the obligation for the first payroll payment of a month, not less than zero. Throughout the quarter, pay off the debt with each subsequent payroll check until the non-refundable component of the credit is used up. Any credit is much appreciated. The credit's refundable portion seems to have no bearing on the Schedule B requirement. What is the non-refundable portion of the Employee Retention Credit? The IRS projected a modification to Form 941 in March 2022 due to the expiry of the Employee Retention Credit. These are the salaries given for qualifying leave in 2021 and 2022. The instructions for calculating the ERC on the form do not provide worksheets anymore. You may be eligible for the ERC if you previously underreported taxes on Form 941. This is handled with the 941X form. The IRS introduced reforms to Form 941 after the expiry of the Employee Retention Credit in March 2022. On the employer's quarterly federal tax return, claim lines for tax credits are still accessible. Qualifying leave was available in 2021, with pay being paid in 2022. The form's instructions no longer contain worksheets for calculating the ERC. That credit is not available for salary in 2022. This is done using Form 941X. If the number in column 3 is negative, change it to a positive in column 4. The ERC's non-refundable part correlates to your business's Social Security payments. Because it can't be more than the amount you were obligated to pay, it's regarded as non-refundable. The non-refundable portion of the income tax credit is applied as a credit to your obligations. The value's non-refundable portion is restricted to the company's part of Social Security tax recorded on Form 941, less any refund for a qualifying small company payroll tax credit for boosting research claimed on Form 8974. Any non-refundable portion of the job prospect excess credit received on Form by eligible tax-exempt organizations and distressed employers that hire qualified members. Non-refundable portion of the Employee Retention Credit. The worksheet is used to determine the non-refundable amount of the credit at the end of the quarter, and the other qualifying expenses and tax on wages paid, such as health care costs, business taxation, or other attributable charges, then are allocated to the earnings. For fiscal quarters after June 30, 2021, the ERC credit is applied to the company component of Medicare taxes instead of to the Social Security taxes paid by the business. The other credits are no longer used as a criterion for the ERC's non-refundable share after this change. The credit's objective is to give current cash flow to businesses that have suffered a decrease in income since before COVID. This is because the company's income has fallen, and the reduction in tax payments has freed up finances to allow it to continue functioning and paying employees. This question might be about required tax deposits rather than tax liabilities. The amount of a tax deposit for a specific deposit period can be influenced by a number of things. A Form 941X overpayment correction, for instance, lowers the amount in taxes that must be paid in the following deposit months. The ERC's refundable and non-refundable elements, as well as many other COVID-19 government subsidies that apply to wages earned during a certain pay period, can be used to decrease the deposit for that pay period. If the employer receives a Form 7200 delayed credit payment, the credits are canceled and the deposits are reduced. Because each employee's retention credit is limited, it could be a good idea to select qualified persons and their remuneration each pay period. As a result, the company would be able to take full advantage of the credit's lower tax deposits. The distinction between the non-refundable as well as refundable portions of the retaining benefit is irrelevant when it comes to tax deposit relief because both lessen the amount of income tax the employer is required to deposit. Likewise, keeping track of acceptable earnings and total allowable credit each pay period decreases the danger of fines if the employer deposits less than the required amount. Non-refundable employee retention tax credit. Only a non-refundable tax credit may make a taxpayer's liability disappear. The taxpayer automatically forfeits any leftover credit amount. A non-refundable credit is distinguished from refundable tax credits by the fact that it is not refundable. A tax credit that is not refundable decreases tax liability by the very same amount. If the prospective credit exceeds your tax liability, a non-refundable tax incentive can only lower tax liability to zero and would not result in even a tax refund. In the United States, the foreign tax credit, the monthly mortgage credit, and child or childcare are just a few examples. Non-refundable tax credits reduce your federal tax burden but do not result in a return. Refundable tax credits might help you get a government refund while also decreasing your tax payment. The fundamental difference between a refundable and non-refundable tax credit is that if your total non-refundable tax credits surpass the amount of income tax you owe, your balance due will only be reduced to zero. The excess refund will not be refunded to you. Even if you don't pay any taxes, you will receive a tax refund for the full amount of your tax rebates. How much of the employee retention credit is non-refundable? To assist people in lowering their tax obligations, the government provides tax credits. A tax credit reduces an individual's final tax bill dollar for dollar by applying it to the amount of tax owed after all exclusions from tax liability have been made. If someone owes the state $3,000 but is eligible for a $1,100 tax credit, he would only have to pay $1,900 once the credit is applied. Tax credits are superior to tax deductions and exemptions since they lessen the payroll tax dollar for dollar. A deduction or exemption reduces a person's overall tax burden, but only within the marginal income tax rate. An individual in the 22% tax rate would save 22 cents for every dollar of marginal tax deducted. In contrast, a credit would reduce the tax burden by the whole $1. What is the non-refundable portion of the Employee Retention Credit 2020? To determine the ERC's non-refundable amount, utilize the spreadsheet supplied with the Form 941 instructions. The final day of the calendar after the season's end was the deadline for completing Form 941, Employer's Quarterly Federal Income Tax Return. The non-refundable element of the ERC is limited to the extent of companies' Social Security taxes left before adding extra credits that are governed by the amount of business Social Security taxes for the calendar quarter ending before July 1, 2021. A few of these points cannot be refunded. Rather, any benefits that exceed the employer's payroll taxes contribution in a given quarter are carried forward to subsequent quarters. The amount of corporate Social Security tax allotted to the non-refundable element of the sick and parental leave benefits likewise limits the ERC. Non-refundable portion of the Employee Retention Credit 2020. The ERC is a refundable tax credit that helps businesses afford the costs of maintaining their workforce. On September 30, 2021, this program came to an end. The refundable tax credit for the tax year 2020 was 50% of eligible salaries paid per employee, up to a total of $5,000 per employee for the whole year. If you qualify for ERC but didn't get a chance to claim it before March 27, 2020, you can do so retrospectively on Form 941X. 2020 non-refundable portion. Some tax breaks are redeemable, but not all. Throughout this session, this distinction was indeed stressed. If an individual owes $1,000 in federal taxes in 2020 and is qualified for a $3,000 refundable tax credit, they can get an additional $2,000 in the form of a tax refund. What is the non-refundable portion of the Employee Retention Credit 2021? The ERC is a refundable payroll tax credit for firms that satisfy specific conditions outlined in the Consolidated Appropriations Act of 2021. If eligible, ERC grantees may receive a credit of up to 70% of each employee's eligible salary for the tax year 2021. This implies that in 2021, a company might claim up to $7,000 per employee every quarter, or $21,000 per employee. Even if an employee receives no other income, consider group health plan fees to be qualifying earnings. Receive a credit of up to 50% of each employee's eligible salary, up to $5,000 per year, for the tax year 2021. Even if an employee receives no other income, consider group health plan fees to be qualifying earnings. Non-refundable portion of the Employee Retention Credit 2021. If your firm was not forced to close, you'd need to see if your gross receipts dropped significantly during the calendar quarter to be eligible. If gross revenues in any quarter of 2021 are less than 80% of the same quarter in 2019, eligibility is attained for the tax year 2021. If your company did not exist at the start of the same quarter in 2019, the same quarter in 2020 might be substituted instead. You can use the immediately previous calendar quarter to determine eligibility under the CARES Act. Whether your company does not qualify based on Q1 2021, you might look at Q4 2020 and compare Q4 2019 gross receipts to Q4 2020 gross receipts to see if it qualifies. This option should aid in the determination of eligibility. Non-refundable portion of the Employee Retention Credit from Worksheet 1. You can figure out which tax credits are refundable and which are non-refundable by filling out this worksheet. The revisions for the fillable Form 941 Worksheet 1 have been issued for the second quarter of 2021. For computing, the Employee Retention Credit of Worksheet 1 has been separated into Worksheet 2. Worksheet 1 Non-Refundable Employee Retention Credit. Form 941 Worksheet 1 is broken into 3 sections. Before you begin Worksheet 1, you need to know how much you paid your employees during the reporting quarter. Fill out the appropriate worksheet areas to determine the refundable and non-refundable components of these tax credits. The IRS published Worksheet 1 to help companies figure out their tax credits. It's merely a calculator to assist you in 2021 with your Form 941 calculations. How to calculate the non-refundable portion of the Employee Retention Credit. The employee retention credit will be equal to half of an eligible employee's pay received for a calendar quarter in 2020. So because the maximum credit for any employee's qualifying earnings in 2020 is $5,000, the system for any employee's eligible wages in 2020 is $5,000. Every calendar quarter in 2021, acceptable wages per employee were capped at $10,000, resulting in a total credit of $28,000 for acceptable pay for every worker. How to calculate non-refundable portion of the employee retention credit. You can calculate the non-refundable portion of the ERC by just following the procedure below. Confirm that you have employees in 2020 or 2021. If you don't hire someone in 2020 or 2021, you won't be eligible for the ERC. You could still be able to get paid time off. Check to see whether you had a qualified closing. You may also be eligible for ERC if your company was completely or partially stopped throughout the year 2020 or 2021 as a consequence of COVID-19 related federal restrictions limiting commerce, travel, or collective gatherings. If your total revenues have fallen, you may still be qualified. Comparator 2019 income to the time frame for which you're claiming ERC. Users will be asked to compare business earnings in 2022 or 2021 to the same quarter in 2019. Your revenue must have declined by more than 20% from the prior or current quarter for periods in 2021. What happens to the part of employee retention credit that isn't refundable? If a person has both refundable and non-refundable tax credits, computing the non-refundable credits first and then applying the qualifying recoverable credits might assist him to optimize his overall credit potential. Non-refundable tax credits should be used first to lower tax liabilities. Non-refundable tax credits, on the other hand, may harm low-income taxpayers since they cannot always use the entire credit amount. Non-refundable tax credits are only valid for the year in which they are claimed and do not roll over. Conclusion and summary on what is the non-refundable portion of the employee retention credit. The non-refundable portion of ERC simply decreases the amount of tax payable to zero. A non-refundable tax credit does not result in a return. If the $3,400 tax incentive is non-refundable, the individual will not owe money to the state but will squander the $400 remaining after the refund is taken. You are not entitled to a return on non-refundable tax credits, but they reduce your federal tax burden. Refundable tax credits will give you a government refund while also lowering your tax payments.
As you can see, navigating the Employee Retention Credit Program is very complex and confusing to try to figure it out on your own. Even on the IRS ERC FAQ pages, it says, "This page is not current." There have been several years of updates and changes to this IRS tax credit already, including 4 congressional acts and 5 updated guidances from the IRS, totaling over 3,900 pages. Who has time to sift through all that information, let alone decipher some of the confusing language and rulings? In order to stay compliant with current IRS ERC rules and regulations, expert specialized help is highly recommended. Even if your business received an SBA PPP loan, you are still eligible for the ERC credit. If you think you may not qualify, it's worth a conversation to see if your business does. Let us assist you with a complete employee retention credit process, or if you might be stuck on filling out the IRS 941X forms correctly on your own. We are here to help. Stay safe, stay compliant, keep more of your refund. Email us at support@disasterloanadvisors.com or call us toll-free at 877-463-9777 extension 3. Or visit us on the web at www.disasterloanadvisors.com/ERC for complete details on the Employee Retention Credit Program for your business.